Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Wednesday, 4/20 for you Musk fans. Maybe some fireworks today where he's concerned. It is 6:32 in the morning as I'm starting the video. And if you're new here, please run your video player at 1.5x. Let's tackle Netflix right off the top here, since it's probably on everybody's mind. You're going to be hit with that all day long if you listen to financial media during the day. Let's start out with the monthly chart because I think it's going to be very interesting to kind of look back and see where the stock has been. I think there's some very interesting levels that popped up as I was working up the chart. And remember, this is going to fit in really, really nicely with our bracket trade theme for earnings season. And, you know, given the size of this gap down about 25% last night, this trade could go on for months and months and months. And I'll tell you why right now. So here's the monthly chart. Let's start up at the top. RSI has been in bull mode for, let's just call it 10 years. And it just recently dropped down with that gap down we had at the beginning of the year. And now we obviously have another one that's going to bring price down right into this 250 area. This is where I looked pre-market. I think it's 254 or 255, something like that. You can see that 250 was a location back in time, back in 18 and 19, where it found support a couple of other times and held there. So now we're going to gap down right to that level. And what you can see is a couple things. I've dropped in the Fibonacci retracement zones off of the big swing low back in 2012. And that's what I have here in black. So here's the 38%, 50%, and then the 618. So you can see that there's a lot of symmetry in this chart from the standpoint of the 618 retracement aligns perfectly with key technical support. And then there's a big void beneath, and where the stock went from, it essentially doubled. It went from 125 to 250 in the course of a year. In 2017, it doubled. And you can see that there's not a lot of technical support below 250. So just looking ahead, if what I would imagine would happen is that on this big gap down, there will be a period of time where the stock stabilizes, and that may be weeks or months, but it'll just hover right here at around 250. Why? Because that was an area of major technical support in the past, and there'll be a lot of muscle memory there for price. It'll remember that level. But if that were to break, maybe there's a broad bear market, or next quarter, they said they expect to lose. They lost 200,000 subs this quarter, and they expect to lose 2 million going down the road. So if that 250 cracks, I could see this thing getting cut in half again and coming down to 125. And before you think that can't happen, I mean, remember Nokia, remember BlackBerry, go back in history. There's always been leaders at some point in market history that lose that leadership position. And although Netflix can still be a leader, but if the valuation metrics are recalibrated for the entire space, like we're not going to pay you X amount for your model, it's all going to come back. We're going to recalibrate it, and I don't even know what's the PE on this thing. PE of 31. Maybe it comes back, because remember, old media. I mean, we used to trade CBS. We can trade Comcast. We can trade. We used to be able to trade DirecTV. Those valuations were pretty low, and maybe all this streaming stuff just turns into that's just how you watch TV. We'll just go back to the revert back to a media multiple of yesteryear. And if all these guys are going to start adding commercials to help their revenue, maybe it just turns into TV. Just like antenna TV, linear TV used to be back in the day, and it doesn't carry the multiple. So what you're going to want to do today is, well, if you're into trading on the day of an earnings event, you can trade the price action. But what I'm going to do is just mark the high and lower the range. That I'm sure it'll go down and at least touch 250 today. So then there'll be a range from 250 to whatever it gets up to. I'll mark that range, and then that'll be my bracket. And if you're not familiar with bracket trades, you can go to the YouTube channel, look under Trade School. You should see a video there on bracket trades. I run through a couple of examples that can dial you in. But anytime you have a news-driven event or there's a big gap in the chart, you can use that model for trading, and it works really effectively. I flipped back to the weekly chart just to show you there's a prior low right down here at 260. We're currently below that intraday. So there's going to be a gap from, well, it's going to be about $100 gap. You're going to go from 350 down to 250. So there will be a big opportunity on a gap fill higher, and there'll be a big opportunity below 250 on the downside, just because of what I showed you on the monthly chart. So just keep an open mind to what potentially could happen to Netflix in the future. And I didn't go over these sympathy plays, but all the streamers are getting hit this morning. They're all down about 5% when I looked. Disney, Roku, the new one, Warner Brothers, Discovery, Paramount, and then secondarily, Amazon Prime, Apple Plus, Spotify was even down about 5%. And I saw an interesting tweet by somebody that said on this knockdown, Apple should buy Paramount because it's cheap and going to be getting cheaper. and they desperately need content. So I'll just throw that out there. I have no idea. I don't follow either. I don't know anything about Apple Plus, what's on there. I'm just, Paramount is relatively new as well. So anyways, those are some sympathy plays that'll probably be gapping down as well today. So you can create bracket trades on those as well as Netflix if you want to keep track of those. So let's circle back to our indexes, and then we'll run through the rest of the FATMAAN names. Obviously, we had a rally yesterday, a nice rally, 1.6%. We have been talking about the 200, which comes right in here at 437.50, and we've been ping-ponging literally between the 50 right here and then the 200. We were able to take out the 50 yesterday. We are right at a $2.50 gap between 445 and 447.50. So if we can make a gap entry this morning, futures were down, but they made a nice recovery this morning. So I'm not going to negate the possibility that we drive higher. You get a little bit better resolution here on a 2-hour chart. We've got the gap. We've also got a downtrend line. So what could happen is, we make a gap entry, come in, fill that gap and reverse, or potentially even break out here to come up to 450, and then that was a big line. That'll be a big line of support and resistance, because we had multiple rejections here. We had a support here and support here and a rejection here. So 450 will be a big line in the sand if price can get above that. But I think given RSI is still relatively weak, PPO still in its bearish regime, I'm viewing this as just volatility, not that we're going to rocket off to new highs, although that's obviously a possibility. I don't want to cut anything short, but this trend line will be important, and then 450 will be really important on any bullish ideas the market may have. So here's your zoomed in look with the gap, the downtrend line, and then we've got another gap up here right at 450. So those are locations on the chart you should be aware of. Very much the same kind of theme on the Qs, except that here it's different in the respect that here we've got a full bearish stack on our moving averages, and so it's a much weaker posture than the SPY that we just looked at, where we had the 200 acting as support. Now all of these moving averages are going to be resistance on the way up. So we've got a little gap here that's marked. Then we've got the 20 that comes in right at the top of the gap. Then we've got the 50 coming in here at 351, and then we've got another gap above, etc. So there's a lot of work to do, but on the downside, this level right here at 339 did a good job of containing the downside. here on the 2-hour chart. What I've done is drop in the Fibonacci retracements from the high of the swing to the low of the swing. And you can see that if we were to fill this gap, that would bring us back up to the 38% retracement level. And it's pretty interesting where these fall. You've got a retracement level right at the top of the gap. So technical resistance aligns with the Fibonacci retracement. Then at the next level, right here in this 352 range, we've got technical resistance. Notice the large volume over price bar. We've got the 50 EMA coming in, and we've got the 50% retracement level. And so we've got effectively three layers of resistance there: technical resistance, the EMA, and the retracement. So that would definitely be an area that if we were to break through here today and make a run up to 352, that would definitely be an area that I would be at least considering a fade, because it's a very objective level. I mean, if it breaks out above that and comes back up to the bottom of the gap, here again, you've got the 618 retracement perfectly aligned with the bottom of the gap. And if it's going to fill all that, then we're just going to go right back up to the top. Here's the zoom in, give you a little magnifying glass on the various levels and where the gaps fall in relationship to that. So I'm viewing these rallies as rallies to fade at the end of the day. I think we're still in a sell the rip environment rather than buying the dip, and until something changes, I think that's the mode I'm going to be in. I still think the Fed is sitting on the high ground with the bazookas. I think they're going to be aggressive, at least initially, on their rate hikes. And I just think it's going to be a tough environment. And then you have things on top of that with reports like Netflix. I think those are going to be hard to dismiss. And I would be taking serious looks at all the bubble names, the high valuation names. I think it's just going to be a really, really tough environment for tech in general. Now, keeping that in mind, Microsoft, Apple, Amazon are in a different league than the bubble and Ponzi names. So I think a lot will depend on how the mega caps handle this environment. And, to this point, they've been basically holding up pretty well. So here we are on small caps. We've been within this trading range for quite some time. We had a rally. We still have the bearish stack, 250, 28. We rallied up to this level here at 201. I think that's going to be a pivot point for this morning. Just keeping in mind that we've got the 50 right here. If that can be taken out, I think you could potentially get a run up to 206. Here you see where the 50 comes in. There's a little gap. Here's that 206 level, and then here's 208, which is the top of the bigger trading range. and then here's 210. Remember, that's 1 year resistance. So all of this activity below 210 is, just volatility, but all of that volatility below major resistance. So really, for me, on the whole chart, for all of IWM, for me, as long as price is below 1 year resistance, and until price can prove it can move back in the range, which would be a very bullish event. Tried right here, but that was a trap. Little peak above and then fail. I'm going to maintain a overarching bearish view on IWM as long as it's below 210. Now, trading this range and volatility is a totally different deal, but bigger picture, leaning to the downside. Here's a 30-minute chart. I've blocked in another trading range where we've been toggling between 201.50 and 197. We had a rip from the bottom of the box to the top of the box yesterday. Nice move, 2%, and actually broke above and put in this little flag. So today, I think you got to be looking at two things. Number one, this 201.50 to 201 area. If price were to roll down, that's going to give you a really nice line to shoot against on the downside, because remember our TA rules, once you're out of a trading range, you want to stay outside. Otherwise, you roll down, your target is going to be the bottom of the box down here. And at the very least, I think you'd make it halfway down to 199. So that'd be a pretty nice little trade. And if you think about it, that would be a 50% pullback from the up move. So you could get an A, B, C type move if in fact this is the beginning of some bigger rally. So I think that's going to be a nice pivot point for you today. If it decides to just rocket higher, you've got a little micro gap right here, but then above 203, you would have more room to run. Notice support, 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 support. So that's going to be all resistance at 203. You get a breakout there, you're going to be able to run up to 205, I think, pretty quickly. So have those levels in mind if you want to trade IWM. I think there's some nice levels there. Facebook, nice little rally, 3% off the bottom, right up into this 38% fib retracement zone. I think it's going to get a little tougher from here. Right here at 220, we've got a level. And then at 222, we've got the 50% halfback. Notice the traffic in here, the support level here, which will make that resistance. And notice the largest volume over price bar on the chart. That'll make 222 a tough nut to crack as it lines up with not only technical resistance but also the 50% retracement area. So that would be a place where I would be favoring price to get rejected, and then that's your A, B, C type move. But If it breaks above, then there'll probably be some power to the upside if it can get through 222. Apple, not as much of a bounce as some of the other names, up 1.4%. You can see that this chart looks a little different than the others, where we had breakouts from the downtrend line off of the recent highs. Here we're still within this downtrend channel. We've got some pretty significant resistance above. I still maintain that these are great levels. They've worked really, really well in the past. You've got resistance at 168.5 up to 170. If it gets above 170, comes 171.50 and then 173, and then you've got a little gap above. So if you get a breakout here this morning and it can move up above 168.5, I think you can shoot for 170 and then all the way up the line. But the toughest part of today is going to be just getting out of this downtrend channel, and be aware that you could get a little bit of a head fake here. Have like a strong first half hour, come up to 168.50, then get rejected, and then come back inside the channel. And then, just like a trading range, if you break outside the channel and then come back inside, your target's going to be the far side of the prior channel. So be aware of that. Tesla has carved out this trading range between 980 and 1020, actually trading a little bit above. Notice there was a trading range back here where 1020 was support. Now all of that is going to be resistance. But as long as it holds above 1020, I think you can find 1050 here. And notice that there is a void in the chart above 1050. If you get above 1050, then you can make a run up here to 1081, where you've got a little gap. And then the top of the bigger trading range is, of course, 1100. That number has been coming up a lot lately in our discussions. On the downside, if it makes a move below 1020, if there's weakness today, my first target would be 1,000, and then your target's going to be at the bottom of the box at 980. So essentially, notice the ping-ponging action. 980, 1020, 980, 1020, 980, 1020, little breakout. If it fails, I think you're going to come back to 980 at the bottom, and then there'll be, again, that big decision point. If it breaks below that, then we'll get a faster move to the downside. But obviously, a lot of responsive buyers in this value zone that ends at 980. If you get a break of 980, I think things move quicker to the downside. Microsoft, notice the value range right here between 282 and 288. I think you want to mark that level on your chart. And then we've got an even bigger level at 290, 291. Remember, we went up and tagged that level recently where there was a rejection. If you go back in the chart, even farther than this, there was a support here that held at 291. It's an important line on the chart. If you break above 291, then we start hitting these Fibonacci retracement levels, but there's a very nice $5 gap in the chart there that if you got a break above 292, I think that would probably fill. You'd probably be seeing a lot of green on your screens, in the FATMAAN names. And remember, you kind of want to get a feel for FATMAAN when you're making a directional bet on Microsoft. I think in general the FATMAAN names will directionally move together. I mean, I don't think you're going to see Microsoft going to 296 today if Apple's kind of stuck in the weeds. They're going to move together. So you might get more horsepower out of one, but if you're taking a directional bet on Microsoft, you kind of want to take a quick glance at least on the other big names and just see if they're green and heading in the right direction, and be cautionary unless there's news that Microsoft is going to race ahead while Amazon's red and Tesla's red and Apple's red. It's just not going to happen. So always keep your montage of the FATMAAN close at hand if you're going to jump into any one of them, just to make sure everything looks good across the board. Speaking of Amazon, nice little rally yesterday, 3.5%. That's a lot. Notice that we've also got a bit of a W type action. We've got, if we kind of use our imagination a little bit, here's the left side of the W coming into the bottom. Here's the middle part of the W. And now we're working back up the other side. So just eyeballing the height of this structure, that gives you your measured move target. If we go from here at the lows to the high point of the inside of the W, you can see that, at least to me, it looks like it could make 3,200 to complete that structure. Does it do that? Don't know. But you've got a really nice line here at 3,150 that you can shoot against. And, if everything, if Netflix is ignored and that's dismissed, and you see Q's plowing ahead, you could be long Amazon and make a run to 3,200, and then we've got a gap up here that could be a natural target. So kind of an interesting structure. Also notice PPO breaking positive and RSI breaking positive as well. So those are some constructive supporting elements for being long Amazon against 3,150. Back to the free 50 club. If it can hold 3,150, you can get to 3,200. If you get a breakout there, then you can get to 3,250 as targets. Not quite as energetic on Google yesterday, 1.8%, which is good. I dropped in the fib retracements. Got a level here at 2,600. I got the next level here, 2,620. Then we've got a gap. Then we've got the 38% retracement level coming right in. Again, here, these are the things I look for on a chart. Where are the confluences of support and resistance. And you can see here we've got one of the largest volume over price bars here at 2660. We've got the 38% retracement level right nearby, and we've got the top of the gap there. So if there was a place to look for a fade, if you were long and you were long here against 2600 and you got your breakout and you got your gap fill, you would certainly that would be a point to roll up your strikes and make sure you got paid for your long. And then you could do one of two things: hold your long and see if you get a breakout, or take it off if you see signs of a hesitation or a reaction bounce, and then say, okay, I'm in the thick of resistance at the 38%, the gap is filled, check mark, and at a large volume over price resistance bar, and then, back down again. So that's active trading. We talked about Netflix. Let's talk about semis. I think we're at a really important spot on the semiconductor chart. Why? Significant downtrend, basing pattern, bear trap, fake breakdown. Most technicians would be, seeing this breakdown, getting short, seeing the reversal, realizing that they're wrong, re-enter the trading range from below after you left it. Where does that point you to? The top of the prior trading range, which is right here. So reject, 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 move down, fake breakdown, re-enter the range. Your target's the opposite side of the box, right there, just like it's supposed to. And now we're at a decision point. We're at a large-ish resistance bar. We're at the top of the range. We made a peak above. Does it break out here, or does it just come back down into the range? Notice that our fib retracement zones are quite a bit higher from here. So what I would say is 247 is a beautiful line to shoot against. If it can hold 247, you've got all this as support. You've got, yes, there's overhead resistance, but you've got a ways till you get into the fib zones. And as long as 247 holds, if you're long, any kind of progress will have you be positive, positive on your position, assuming that it moves and it doesn't just sit there. But I think 247 is a great pivot for today. And if it breaks the other way, if it breaks down, top of the box goes back down to the bottom of the box. So I think in either direction, that's going to be a really, really nice level for you. Now let's talk about ARC really fast. Painful day yesterday. If you're going to be short, which I was, I held my position. You got to take the pain with the pleasure. It would have been nice to just, okay, close it out here. I wasn't that good. I should have done that in hindsight. But if you're going to have 4% down days, you're going to have 4% up days. And it was like that across the board. If we look at ARC-G, that wasn't up as much. But I wasn't in ARC-G. It's still within this down channel, so I still think that's a definite short. ARC-K, yeah, it was up 4%, but you can see here we still got a downtrend line, or I do, and I got a level right here at 63. I mean, if it goes up there, I'm just going to stop out. But I think these high valuation names, you're bound to get an up day after, going from 70 to 57 in a week. Okay, it put in its 3% day or whatever. ARC W, same thing. I got to be real careful here. I'm in a May 80 put, so I watched a lot of profit disappear. In hindsight, I should have kind of looked at this high volume support area and just taken it off there and then recycle it later. I didn't do that, so I'm still short on ARC. Today will be an important day. If the rally continues, probably just close all that stuff out and then reload. Even though the bigger view is bearish, timing is everything. And if there's going to be a sustained rally, then I'll just take that stuff off. So, also, I sent out a note last night on other tickers for bracket trades for today. You can track those. Let's wrap it up here. I hope you found the video useful. If you're new to the channel, thank you so much. Please hit the subscribe button, the alarm bell, and over in the show notes, you'll find a place, a link to the blog site where you can drop in your email address, get all my content, morning, noon, or night. It'd be great to have you. You'll also get an invite link to our trading room where we'd be glad to have you there as well. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.